All right, hello everybody. Just want to spend a few minutes talking about natural gas because some of the stock market jobbers have been really doing well on this over the past few, actually months now. Um, and the reason why is because the levels in natural gas have been pretty easy to identify. Now, if you don't trade natural gas, don't worry. You don't need to be a futures trader. You can actually buy an ETF that is going to go up if natural gas goes up, and you can buy an ETF that's going to go down if natural gas goes down. So even if you're not a trader and you're afraid of your natural gas bill this year, you might want to consider putting some money into the natural gas ETF that goes up if the price goes up, because this is what we call a hedge. You have to pay more money on heating your home, but at least your brokerage account grows a little. So I have a fascination with big vessels, as they call them, and this thing is pretty badass and big. And somewhere up here, it's funny, there's a sign that says like no smoking. Man, if you were smoking and you set off the wrong thing. All right, anyway, so let's look at natural gas, the commodity. Now we're going to look at it's called the futures contract. But you don't need to trade this. If you're not a futures trader, don't worry. I will explain to you how you can profit from trading things just like stocks. So this is natural gas, and this is why some of the members have done very well. There's been very clear levels, and as traders, we look for levels because levels are like forks in the road or fork in the trail. When a stock or a commodity or a crypto or whatever it is you're trading gets to an important level, there's a good chance it makes a move. And believe it or not, sometimes the levels that were support can turn into resistance, and sometimes the levels that were resistance can turn into support. So this over here is a resistance level. There were so many sellers or so many sell orders or so much supply that they kept a top on the market. The buyers, if they wanted to buy, they could buy all they wanted to. Turns out it was a mistake because it was going to go lower, but this is just the way the markets work. So we get down here, we find support here. Notice where the very bottom low is there. This is in late October. We come up, we get to resistance again. Now check this out. We blast off and we reverse. And where did this happen? The exact same level, right? For some reason, natural gas likes the $7 level. I can't explain why. I'm not a macro trader. Sometimes this whole level thing is kind of mind blowing and baffling. But if you look at pretty much any chart, you can see it's true. Now let's see what happens. Resistance somehow magically becomes support. This happens because it's market psychology. It's seller's remorse. People sell or investors sell, the price goes lower, they think they did a good job. And then when the price goes higher, they say to themselves, gee, I want to buy my, in this case, futures back, but I'm not going to pay more than I sold them for. So they place their buy orders at the same level they had their sell order at. If there are enough of these buy orders being placed by remorseful sellers, the level will convert into support. It will go from resistance into support. So we can kind of see this phenomena again. We fall back down here. We come up again. Now what has happened here? Support has become resistance. This is buyer's remorse. Investors buy, the price goes lower, they regret buying, they tell themselves, I want out, but I don't want to lose any money. So I'm going to wait until it gets back up to the price that I bought it at, and I'm going to sell it and get it at break even. So if there are enough remorseful buyers placing sell orders at their former buying price, it forms resistance. Here, once again, we have resistance becomes support. Remorseful sellers want to buy their shares back. So any chart is a lesson. And when we're looking at charts, chartists have a bad reputation, but most of them should because a lot of them just really suck and don't know what they're doing. They try to identify these patterns. They pay attention to these mythical science fiction things like Ganveri. The real institutional traders who know what they're doing and who make money understand this concept of levels. All right, so market starts trading down, and just assume you were short or you own the inverse ETF. Where would your target be? Well, former support level. Hey, that's a good idea. Hangs out, starts to go down again. You get back in your short position. Hey, where would be a good level for a target? Well, look at this right there. Where did we end up? Right there. Now, this is the level we're paying attention to here at stockmarketjobber.com for the next move, but it doesn't need to be sophisticated. It's about trends and levels. Support becomes resistance. Why are none of these levels in here as important as up here? I have no idea. But after years and years and years of thinking about this, I've stopped trying to figure it out. It's illogical. It's human behavior. All right, so you don't need to be a futures trader. Let me just show you a couple things, and then we'll talk again. This is an ETF that trades inversely to natural gas. And not only does it trade inversely, it trades by 2 times as much. It's leveraged. So if you don't trade futures and if you're not an options trader and you think natural gas is going to go down, you can buy this. It's an ETF. It trades like a regular stock. So you don't need to be that sophisticated, but one of the things these days is there's so many ETFs that it really gives retail investors the ability to gain exposure to almost any area of the market. So this is the ETF that goes in the opposite direction. Natural gas goes down, this goes up. Natural gas goes up, this goes down. You got to be careful there because leverage can hurt you if it's going the wrong way. All right, and then just last but not least here, I wanted to show you the ETF for the natural gas bulls. People who don't buy futures, but they think natural gas is going to go up. If natural gas is going to go up, consider this ETF BOIL, or if you think natural gas is going to go up, I should say. This is leverage, so it'll go up pretty much twice the amount that natural gas will. So for example, if natural gas is up 3%, this is going to be up around 6%. And I should give the disclaimer here where it says BOIL is only appropriate for sophisticated active investors, which basically I copied off the website. And it said this, it's the same thing with cold, but you don't need to be, if you understand what I'm saying now, you don't need to be too worried. Just understand that these things are leveraged, so they're going to move twice as much. So if it goes the way you think it's going to go, you can make twice as much as you would just by a regular investment. And if it's inverse, leveraged, it's going to go twice as much in the opposite direction. So they just need to put out a warning so you understand leverage and how it works. But if you're a member of stockmarketjobber.com, you'll realize that this isn't, this is not a reason to avoid these ETFs. Some of our members have done really well over the last few months with these. All right, that's it, everybody. Thank you for checking in to our commodities page, and I'll talk to you soon.